Bring up the chart here. Here's the idea of the VIX, and we exploded up yesterday from an unbelievable, as Greenspan would say, quiescence to something a little bit sweaty. Is it good for Chair Yellen if we get off the quiet of a 10 VIX?
Yeah, I mean, we want to see a little more volatility. I mean, the market's kind of gone to sleep here, and it's been lulled to sleep simply because the Fed has this gradual rates path going forward. We've never been told in history where the Fed is going to put the Fed funds rate over a 3-year period looking forward. That kind of destroys uncertainty. So it's good to have a little volatility, although probably not for the reason of North Korea.
You are a congenital optimist. You've always moved towards a 3% yield. It's not happened. Rupkey and a lot of other people have not been wrong, but just waiting and waiting. Again, another chart here. This is log 10-year. This is the way the pros look at the 10-year yield. Slope matters, and we're really on trend for a continued great moderation. You want to get back to, Chris, the nirvana of 06, call it a 4.5% 10-year yield. Dominic Constant yesterday says no way you're going to see that. Do you agree?
Well, let's try and get it to 3% first. I mean, back in that period, we have noticed that lately the 10-year yield, the bonds, don't overshoot what the Fed is going for. Where is the ultimate end game for the Fed? So back in 2006, 5.25% Fed funds rate, 10-year yields roughly got a little above 5%. So now the game is we're just trying to get to 3% on the 10-year yield at this point. And that's the battle. Maybe the QE wind down, maybe the balance sheet wind down will do something, unleashing a little more supply into the market to help push up yields. But, you know, people are very reluctant to push up yields here in front of the Fed.